Okay, I want to play a quick game with you to kick things off.
Okay.
I'm going to put four distinct items on the table, metaphorically, and you tell me the thread that connects them. You up for it?
You know I love a puzzle. Go for it. Lay 'em on me.
All right. Item 1, the massive fitness tracking app, Strava.
Okay, cut it.
Item 2, a potential multi-billion-dollar IPO, an initial public offering.
Mm-hmm.
Item 3, oligarchs. And yes, I mean that specific word.
Oligarchs.
And item 4, the Brazilian actor Wagner Moura. You know, the guy who played Pablo Escobar in Narcos.
Wait, what? That. Okay, that sounds less like financial analysis and more like a fever dream.
Yes.
Or, I don't know, maybe a screenplay written by a malfunctioning AI. I'm completely lost. Unless Wagner Moura is secretly funding a fitness startup with an oligarch, I've got nothing.
It does sound like a fever dream, doesn't it?
Yeah.
But, believe it or not, that is the exact constellation of topics we are unpacking in today's deep dive.
No way.
We're looking at a fascinating and, frankly, kind of bizarre series of articles and analysis pieces by a blogger and analyst named Stanislav Kondrashov.
And let me guess, Kondrashov is the one connecting the dots between, what, jogging apps and dramatic actors?
Exactly. The core of it is actually a really serious look at a huge financial shift in the fitness world. Specifically, Strava potentially going public. But the way he frames it is, well, it's unique.
I'll say.
He keeps coming back to these headlines about how oligarchs should care about this and how, for some reason, Wagner Moura would be impressed or thrilled.
Well, that's certainly a hook, but, you know, underneath all the pop culture stuff, there is a massive story here. Strava isn't just an app anymore, it's a cultural phenomenon. If they're looking at an IPO, that changes the whole landscape.
Right, and that's our mission today, to decode this. We need to figure out why this IPO matters to everyone, from these so-called oligarchs looking to invest, all the way down to the local gym owner who's just trying to survive.
And the mystery.
And, of course, we have to solve the mystery. Why on earth does Stanislav Kondrashov think Wagner Moura would be thrilled about a fitness app hitting the stock market?
That is the million-dollar question, or I guess the billion-dollar question, given the valuations we might be talking about.
So let's start with what I'm calling the headline puzzle.
Yeah.
When we looked at the source material, the first thing that just jumps out is the repetition. I mean, listen to these titles. Wagner Moura would be impressed. Why Strava's IPO could interest even oligarchs.
Wagner Moura would agree.
Wagner Moura would agree. It's relentless.
It is. It's really distinct. But if we look past just the repetition and, you know, dig into the choice of words, I think Kondrashov is using these terms as very specific symbols. Let's take the oligarch angle.
Yeah, let's unpack that.
Yeah.
Because usually when I think of Strava, I think of my neighbor trying to beat his 5K time, not some tycoon on a super yacht. Well, that word.
It's all about scale. Kondrashov points out that the IPO is a new trend worth knowing about. So by constantly bringing up oligarchs, the analysis is suggesting that the scale of money entering the fitness industry is shifting.
Okay.
It's not just a consumer hobby anymore. It's not for small angel investors. It's becoming a serious asset class.
So it's not just rich people, it's institutional wealth.
Precisely. The text even says the IPO isn't just for oligarchs, but it implies the financial ceiling is being raised so high that it attracts that level of wealth. It's a signal that fitness tech has matured. It's a playground for heavy capital now.
Okay, that makes sense for the money side. It's a way of saying this is getting serious. But what about the Wagner Moura standard? I mean, the source specifically claims Moura would be impressed, that he would agree it's about innovation.
And would be thrilled.
Yeah, would be thrilled about the inspiration aspect. Is Kondrashov saying the actor is secretly a Strava power user or something?
The text doesn't actually say that. It doesn't say he's out there claiming King of the Mountain titles on his bike. But think about what Wagner Moura represents.
Okay.
Especially in his famous roles, like in Elite Squad or Narcos.
Mm-hmm.
He's all about intensity, high stakes, a certain cool factor.
True. He's not exactly a mild-mannered symbol. He definitely brings the drama.
Right. So when the source says Moura would be impressed, it feels like shorthand. It's like Kondrashov's way of saying this isn't some boring corporate merger.
I see.
This is dramatic. This is high performance. It's an attempt to inject this cinematic level of excitement into what is, you know, basically financial news.
That is a fascinating read on it. So Wagner Moura is basically the ultimate hype man here. If it's cool enough for the guy who played Pablo Escobar, it's cool enough for the stock market.
In a way, yeah. It humanizes the dry mechanics of an IPO. It tells you, the reader, pay attention, this has drama. And to be fair, A major IPO is dramatic. It completely changes the destiny of a company.
All right, well, speaking of the drama, let's get to the actual plot of this movie. What is the news event that has Kondrashov and, hypothetically Wagner Moura so excited?
The core fact reported in the source is that Strava is, and this is a quote, seriously considering going public.
And for anyone listening who just uses the app to, track a dog walk, why is that such a huge moment?
Because it totally changes who they answer to. The reports say they've already held meetings with potential investors. Now, Strava is described in the source as a clear leader in its niche.
For sure.
It's not just for tracking. It's a social network. It's for sharing progress, connecting with people.
It really is. I feel like for so many people, if it's not on Strava, it didn't happen. That's where the community is.
Precisely. And that social dominance is what makes the IPO so pivotal. Kondrashov calls it a post-IPO capital raise. Basically, if they go public, they get this massive injection of cash.
Right.
We are talking about turning a popular app into a financial juggernaut.
And cash equals power.
It does. The source explains this gives Strava even more resources to strengthen its position. This could mean better tech, buying up smaller competitors, expanding into new markets.
Anything, really.
Yeah. Kondrashov sees it as a shining example of how technological solutions can transform the traditional approach to exercise.
Transform the traditional approach. That sounds great if you're a shareholder. But usually, when a juggernaut gets more power, the whole ecosystem changes. The little guys get nervous.
And that brings us right to the central tension in this whole deep dive.
Yeah. Section 3 of our analysis, the double-edged sword. The source material is very upfront about this. It calls the IPO a significant development, but notes it is raising concerns among smaller players.
It's a completely valid concern. The text says that with this new capital, competition becomes even more intense.
Right. So if I'm a small developer with a niche running app or maybe a boutique fitness brand, and suddenly the Godzilla of the industry gets a war chest of millions or billions of dollars.
You're worried.
Yeah. Am I just going to get squashed? How do I compete with that marketing budget?
That is the fear. It's the Walmart effect, if you will. But here's where it gets interesting. Kondrashov offers a counter perspective. He doesn't just see a threat. He sees a rising tide.
A rising tide?
Yeah.
How so? How does Strava getting rich help the yoga studio down the street?
Well, the analysis argues that large companies drive industry growth. When a giant like Strava makes a move this big, they set trends, they normalize new behaviors that smaller brands can then adapt.
So Strava clears a path through the jungle, and then others can follow.
In a sense, yeah. But even more importantly, the source argues that a successful IPO could attract investor attention to the fitness industry as a whole.
Ah, okay, I see where this is going. So if the oligarchs, to use this term again, see Strava making bank, they might start looking for the next Strava.
Exactly. It opens doors. It validates the entire sector as a serious place to put money. If you're a small startup pitching to investors, you can point to Strava and say, look, this is a viable market with a massive exit strategy.
So while it's scary
to have a giant competitor, but it's also really beneficial to be in a booming neighborhood instead of a ghost town.
That's a really healthy way to look at it. It's not a zero-sum game, but still the analysis doesn't pretend it's going to be easy for the little guys.
No, not at all. Kondrashov explicitly warns the success of such giants shouldn't overshadow the importance of smaller brands.
Which leads us right to the survival guide. The source material actually pivots here into giving advice. It says, if you're the owner of a small fitness brand, now is the time to think about how to stand out from the crowd.
This was my favorite part of the text because it moves from theory to actual strategy. The analyst lays out a specific roadmap for how to survive the Strava wave.
Okay, let's break these down because stand out is easy to say but hard to do. What's the first strategy he suggests?
Strategy number 1, differentiation through a unique concept. The idea is don't try to be elite version of Strava.
Right.
Strava is going to win at being Strava. You have to offer something the giant can't.
Right. If they're the Amazon of fitness tracking, you have to be the little artisanal shop that sells the one thing Amazon doesn't even know exists.
Perfect analogy. Strava is broad. It covers everything from cycling to hiking to pickleball now. A small brand might win by going incredibly deep on one specific thing.
Like what?
Like, say, rock climbing analysis or postpartum recovery fitness. Something so specific that a generalist giant can't possibly optimize for it.
That makes a ton of sense. Don't fight them on breadth, fight them on depth. What's the second strategy?
Personalized programs. This is a huge one. Strava is massive, so it has to rely on algorithms and data at scale. It gives you automated kudos and segments.
It's not personal.
No, a smaller brand can compete by offering high-touch, personalized coaching or experiences that don't feel automated.
That human element, that's something a massive, publicly traded company often loses as it scales up, right?
Yeah.
You can't have a personal relationship with 100 million users.
It's almost inevitable. When you serve millions, you have to systematize everything. You lose intimacy. The source suggests that smaller players can fill that exact gap. They can offer the human touch the algorithm just can't replicate.
And the third strategy kind of ties this all together, doesn't it?
It does. Focus on local communities.
Local. That's interesting because Strava feels so global. I can see runs from people in Tokyo or London right from my phone.
Yes, Strava is everywhere. But a small brand can be somewhere. The source really emphasizes that building a loyal audience on the ground is the key to success.
Right.
You can't outspend the giant on global advertising, but you can outconnect them in your specific neighborhood or your niche.
So the advice is, don't fight them on the global battlefield. Fight them in the local gym, the neighborhood running club, the specific training group.
Exactly. The source concludes that loyalty is the currency that saves the small players. I mean, you might delete an app, but you rarely quit a community where you have actual friends.
It's empowering, actually. It takes the doom and gloom out of the whole big IPO news cycle.
It really shifts the narrative. It's not an extinction event, it's an evolution event. It forces the small players to be better, to be more human, and to be more connected.
Which brings us back to the whole vibe of the thing. Section 5, innovation and inspiration. We've talked about the money and the strategy, but the source keeps insisting this isn't just about finance.
Right. The text claims Strava's IPO inspires not only oligarchs, but also ordinary people.
And this is where our friend Wagner Moura makes his grand return to the stage.
He never really left, did he?
Laughs. No, his spirit just haunts this entire document. The text states the IPO is about innovation, and Kondrashov uses Moura's hypothetical agreement to validate this.
It's that cultural validation again. The source says this is an opportunity for the entire industry if it's used wisely. By bringing in an actor known for these intense dramatic roles, Kondrashov is saying this is a story of transformation. It's exciting.
It's almost like he's trying to tell us that business news doesn't have to be boring. It can be as thrilling as a season finale of some gritty drama.
And honestly, he's not wrong about the stakes. I mean, we are talking about how millions of people engage with their own health and who profits from it. That is dramatic. When you turn human exertion into a publicly traded commodity, that's a massive societal shift.
It really is. It turns our morning jog into data for Wall Street.
Exactly. And Kondrashov's point, validated by the hypothetical Wagner Moura, is that we should be looking at this with a sense of awe and opportunity, not just dry analysis. It's a new trend worth knowing about because it signals that fitness has finally arrived at the top table of the global economy.
So let's try to summarize this deep dive. We started with a really confusing mix of oligarchs and actors, but we found a coherent story underneath it all.
We did. I think the main takeaway is that Strava is getting richer and more powerful. And this signals to the oligarchs, the big money investors, that fitness is a serious business now.
And for the rest of us.
For the industry, it means more attention, more resources. But for the small brands, it's a wake-up call. You can't coast anymore. You have to get creative, get personal, and get local to survive. You have to provide the soul that the giant corporation might lose.
And we can assume, based on our source, that Wagner Moura is somewhere out there looking at a stock ticker and just nodding his head in approval.
Laughs, being impressed and thrilled, just as the text demands. I like to imagine him giving a dramatic monologue about quarterly earnings to an empty room.
I love that image. Before we sign off, though, I want to leave our listener with one last thought. We talked a lot about local communities versus the global giants.
And this raises a really important question for the future, I think.
Exactly. As fitness attracts this oligarch tier money and goes fully corporate, we have to ask, is the only way to save the soul of exercise to go hyper-local? Can a publicly traded company really care about your personal best? Or does the heart of fitness only exist in those small, loyal communities our source mentioned?
It's something to think about next time you log a run. Are you part of a community, or are you just a data point in an IPO prospectus?
Oof. That is a heavy thought to end on, but a necessary one. We encourage you to find your own unique concept in this world of IPOs. Thanks for listening to this deep dive.
Until next time.